Hello everyone, welcome back to this video. My name is Saket and I talk about stock market, macroeconomics and geopolitical issues. And in today's video, we are going to discuss about three main topics, starting with recent market movements to specific stock analysis and even a hypothesis on ongoing bull run. So grab a cup of coffee and sit back. We witnessed a significant fall again. And it's crucial to understand what factors behind it. I searched in the web and also read in newspapers, but there is no reason for today's fall. My hypothesis on this is that the FIS and DII'S might be strategically booking profits in stocks that are overvalued. For example, railway stocks has tripled in the last 3 months, and I think these people are booking profits and they are strategically moving their funds into the undervalued stocks. I told you in last month's video, and this is a premature bull run. And I told you that there will be a very huge correction, like 10 to 15%. And I think we are seeing that. In the Nifty 50, 25,000 and 26,000 actively traded in the December series and questioning the market surge without HDFC Bank's participation. This could be a signal of investors, institutional investors possibly doing profit booking with the other stocks which are overvalued and they are keeping their funds to enter into the undervalued stocks such as HDFC, Hindustan Unilever, and Bajaj Finance, etc. So these aligns with the idea of premature bull run, which we discussed in the last month's video. And shifting gears to another heavyweight company, Hindustan Unilever. Hindustan Unilever has shown a remarkable history of consistency by growing 15% year on year growth. One thing we should understand in the stock market, great business and great business model will dive us home. Before that, let me explain you some of the key reasons why Hindustan Unilever corrected. The first reason was rural problem. The second reason was Israel Hamas crisis. The crude oil went up in the initial part of the war, and because of that, 1 month, 1 to 2 months lag effect was affected by Hindustan Unilever. And if you see, the pricing began negative. So, pricing came down by detergents because of competitiveness in the sector. And if you understand, is the problem temporary or permanent? Let us see. A temporary problem can typically, resolved in few quarters or few years, but eventually it can be resolved. And let me show the evidence suggesting that all these problems are temporary. The first problem is rural problem. In October 2023 meet, they told in the note they told us, so you can see here, India's per capita of FMCG consumption when compared to other similar economies is significantly low, and within that rural is highly under indexed. Penetration levels for many of other large categories are still low. Premiumization is bound to accelerate as India has become more affluent and more urban. The more affluent population is expected to double by 2027. Naturally, their per capita FMCG consumption is much higher at 1.5 to 2 times compared to the national average. And but if you see, this is indicating this is indicating a resolutions. And if you see the Israel Hamas crisis, the crude prices are gone up in the initial days, and it was is resolved, indicating crisis has been resolved. And negative pricing, if you see negative pricing, this is a major concern for me also. Because of the competitiveness, these Hindustan Unilever company had cut their prices, and the viewpoint is very clear. If the inflation increases, the small and short companies will be shut down. The distribution issue in the Maharashtra, and if you see the problems with the kirana level. So in the at the kirana level, however, as an urbanization progresses, these issues will be diminished. And I want to make clear that if you see the financial perspective, Hindustan Unilever is at 54 PE, which is very sensible for a FMCG like Hindustan Unilever. But the profit showed only 1% gain. I also mentioned the reasons above. Overall, the HUL is considered to be a very good. And if you want to buy for a core portfolio, then I think this is the right time to do so. And please consider if you don't have the Hindustan Unilever in core portfolio. And this is not a stock recommendation. Please consult your financial advisor. The 54 PE is very reasonable, as I said. And if you see the technical pattern, there is a very clear cup with a handle pattern suggesting the potential gain of 51% from now. So here is my strategy. I am buying with two perspectives. The first one is I will be selling 75% of my Hindustan portfolio when it reaches to the target, which is 51% of gain, and remaining will stay in my core portfolio. If you are considering a core portfolio, then this may be the right time. And you should consider Hindustan Unilever by saying all this. And please don't take it an advice. Again, this is not any financial advice. Please make sure you consult your financial advisor before making any investment decision. And if you enjoyed today's content discussing about the various strategies how we are going with the Hindustan Unilever, don't forget to subscribe my channel and hit that bell icon. Share your thoughts in comments below. Until next time, happy investing. Thank you.